Hi guys, welcome back with me. Before watching this video, don't forget to like, comment, share, and subscribe. Okay guys, I'm gonna read some article in investing.com by Rodrigo Campos. Slowing growth exhibits debt strains corporate bankruptcies from IIF. Slowing economic growth is pushing up global debt levels, especially in emerging markets. The Institute of International Finance (IIF) said on Wednesday, warning of a significant rise in corporate bankruptcies ahead. The global debt to GDP ratio, a widely used measure to gauge a borrower's ability to pay back debt, rose to 350% in the first pay in 5 quarters. If IIF found in emerging markets, that ratio climbed by nearly 3.5 percentage point to 2 and 52% in of gross domestic produce, reflecting the hit from a sharp slowdown in economic growth. Inflationary pressure have not been high enough to bring the ratio down. The IIF's emergency growth in the note the rise comes despite an overall decline in world debt, which surged 5.5 trillion dollars to $300 trillion in the 3 months to end June in US dollar terms, the first quarterly drop since 2018. Debt in major market declined $4.9 trillion to just over 2 and 1 trillion $201 trillion, while a proportionally much smaller $0.6 trillion decrease in emerging market put the total across developing economies at $99 trillion. The decline in the overall amount of debt was driven by the dollar near 20-year highs against other main currencies as well as slowdown in issuance. A toxic mix of rising inflation, fueled by soaring energy and food prices, has pushed interest rates higher globally in recent months, in turn amplifying global recession rise. Meanwhile, governments have ramped up spending to shore up economies from the energy shock, concerns over a rapid slowdown in growth, and rising social tensions due to higher energy and food prices will likely prompt more borrowing by governments. IIF economists said in the report, forecasting global debt to GDP to rise by another 2 percentage points by year-end. The data showed that through August, year-to-data issuance of government bonds came in 20% below the same period in 2021. Government debt ticked down to $85.8 trillion, but is up 21% from the $70.7 trillion in the first quarter of 2020. The data show highlighting the fiscal stimulus ramp up triggered by the coronavirus pandemic. Upward pressure on borrowing costs is set to continue, with the U.S. Federal Reserve forecast to raise its benchmark rate by at least 75 basis points next week. A significant interest in corporate bankruptcies may well be on the cards as borrowing costs rise, which will make it quite challenge for central banks to engineer a soft landing without adverse inflation for job markets, the IIF said. Sovereign investment grade issuer saw yield rise much less than riskier countries. The IIF data saw 16 of the 35 countries with a major food crisis are already in or at high rise of debt distress. Okay guys, maybe that's all from me. Thank you for watching. Don't forget to like, comment, and subscribe. See you.